then the industry easily says that, okay, I mean, we cannot take the risk by investing into this product, into this new industrial capacity. And then the question from the defense contractor is that, okay, can you help us with the investments? That is all based on you trying to minimize the risk that you are investing into something that eventually will not sell. And it's all about risk sharing. Who takes the risk of future revenue?
Welcome to Category Leaders, where we unpack the stories of European companies who have won their category globally. We believe that studying these category-leading companies, telling their stories, and distilling those insights helps us build and invest in better companies for the future. Best in the world, based in Europe. Welcome to Category Leaders. Today we are diving deep on a quiet, unassuming company from Edinburgh, Scotland, who is the global category leader for growth stage investing, Baillie Gifford. Their returns match the very best investors in the world. They are right up there because they quietly and patiently and actively invest in category leaders themselves. My name's Colin Brown, and I'm joined here by my very good friend, Marty. He's the co-host for this episode and will be joining us for a number of the category leaders programs. Marty, this is a great story to tell.
I agree. And some people may think that why are we going so long back in time in a case like this? And I think it is very important for at least two things. History tends to repeat itself. So therefore, the ways how they tackled certain events in the past have actually shown that they are using those as a guideline also going forward and seeing future crises. And the second thing is that some of their mandates date back to 100 years, more than 100 years. I mean, they got to be doing something right if they are able to maintain through the generations of leadership, generations of investors, they are able to maintain the mandates. I mean, it's a remarkable achievement.
It's a remarkable achievement. It's a remarkable company. And their returns, they match the very best investors in the world, right? The household names, whether they're in venture or hedge funds, they're matching them. They're right up there. And this is a company that almost nobody outside the investing world has heard of. Now, they're quiet, they're patient, they are active investors, not activists, they're active investors. And they also invest in category leaders themselves. So just a quick summary for those people thinking, well, who the heck is Baillie Gifford? They were founded in 1907 in Edinburgh. Their first big deal was financing a Malaysian rubber plantation that supplied tires for the Model T Ford. Unlike most investment firms, as Marty mentioned, they've stayed as a private partnership, more like a law firm than an investment firm. They have a very long-term outlook. They like to think in decades, not quarters, and they have no outside shareholders. Now, they manage other people's money, but they don't have any shareholders themselves. And they've quietly and solidly over time built their reputation as an anti-Silicon Valley fund. Now, when you look at the companies they're invested in, whether it is Amazon or Google or Alibaba or Tesla or SpaceX or Spotify, Shopify, Moderna, ByteDance, Nvidia, you could go on and on and on. They sound very Silicon Valley, but they're not. They've had their duds. They missed out on Palantir's 1,400% stock rise. And they've also had their failures in Northvolt, here in the European battery scene. If you were to describe Baillie Gifford's culture, it's intellectual rather than flashy. They have a heavy emphasis on curiosity, research, and patience. And they're more historians or scientists by background, not bankers from any the City of London or Wall Street.
Well, in a way, I mean, you could even say that they are even amongst their own staff, their own partners, they are looking for the character of the people rather than the, let's say, the traditional metrics or the KPIs that other people see. That's how they are also running the companies. They look for the best teams that are able to make the success. And in a way, they are very consistent and have been very consistent over the decades in their approach to investing into people.
Yeah, and again, it's a long-term story, so we will start back in time. They start with 50K in investment. And, foreshadowing where we get to, they're about 280 billion assets under management today. It only took them 117 years. So it's a classic overnight success story. But let's break it down. I think we can tell this story in about 5 parts. I think part 1 is the founder's story. And it talks about their investment in rubber, the Model T Ford, and their wartime role. So that's like the 1907 to 1945 period. I think part 2 is a kind of tale of post-war rationing. Britain's in a terrible state after World War II, and Baillie Gifford isn't much better. There's an inward culture, and there's a domination by the UK kind of crisis. That's 1945 to the 1980s. Part 3 is Japan. It really becomes this frontier lab for Baillie Gifford. It's where they try a number of opinions, they try a number of theses, they experiment. And they start to bulk up. They start to manage more of other people's money. That's the 1980s to the 2000s. And then part 4 is the story of tech, Tesla, and becoming the category leader themselves. That's 2000s to 2020s. And then part 5, I think there's an really interesting part 5, is their more recent segue into defense investing and security investing. And I think we'll tell that story through 3 of their investments. Palantir, who I mentioned earlier, another Lord of the Rings inspired name, Anduril, and then I'll try and pronounce it correctly, Tekava, which is a European investment in an autonomous drone company. And that's really 2022 onwards. Marty, how does that sound? 5 parts for what is a very exciting company.
That sounds very nice, and what I hope that our listeners will follow while we go through the history, how many segues there are actually to other countries, not only UK. The same thing happens in Europe, happens in the United States, and what are the lessons we can learn from the past going forward?
Absolutely. Okay, so let's start with the past. So the company's name is Baillie Gifford, and that's because their 2 founders is a chap called Baillie and a chap called Gifford. And so we have to wind the clock back to very much almost the apex or the zenith of the British Empire. Okay, so our first protagonist is born in 1861, and his name is Augustus Charles Baillie. Now, Gifford, the second co-founder, he's born 20 years later, so we'll come to his story second. But Augustus is the second son, the third child, of Evan Peter Montague Baillie and Lady Frances Anna Bruce. Now, this is not your everyday Scottish family born at the time of empire. Or perhaps it is. They are extraordinary, but they tell a story in their own right. So Evan Montague, or Evan Montague Baillie, is a diplomat. He serves in the British embassies in Vienna and in Frankfurt and Paris, and very notably Brazil. So that's the dad, right? That's Augustus. Augustus's father's a diplomat. His mother is Bruce, if anyone's familiar with Scottish history, is a very notable name. And she ties her lineage to the Elgin estates. So this is aristocracy. This is land-owning pursuits. And that's the parents. And then there are 4 children, 3 boys and a girl. The girl comes first. So Augustus's older sister is Victoria Matilda Susan Baillie. She's born in 1857, so a few years before her younger brother. And she serves as extra woman of the bedchamber to Queen Victoria. Like, I'm not sure that you can get jobs like that these days.
Yeah, and that's not even the most curious name for a job in the royal household in the old days, or even today. There are many jobs that we never even knew existed.
Absolutely. So Queen Victoria is one of Britain's longest serving monarchs. Queen Elizabeth II just overtook her record, and she basically does a long time on the phone. Victoria, Augustus's older sister, basically is a confidant. So her job is basically to keep the Queen company whenever she's in Balmoral, which is the royal household basically in Scotland. And the Queen
Mm.
spends a lot of time in Balmoral. So she spends a lot of time with Queen Victoria. That in itself is fascinating because Queen Victoria has, by this stage, with her husband Albert, populated her entire offspring onto pretty much every throne in Europe. So this is a very internationally facing audience. So that's child number one, Victoria. Then Augustus's older brother, James, goes down the military route. So he's born a couple of years earlier than Augustus. He serves as a colonel, rises to that rank in the British military, then basically leaves the military and then moves to become the Member of Parliament, or MP in British parlance, for Inverness. So he basically becomes government material. So sisters in the monarchy, confidant, brothers basically military, then government. And then effectively there's Augustus, which we'll come to. And then the fourth child, Albert, becomes a clergyman and becomes basically a very senior member of the Scottish church. So there you go. Victorian England in a nutshell. Father's a diplomat, mother's an aristocrat. First child is a confidant to the monarch. Second child is military, then an MP. Third child is military and law. We'll come to him because we're spending the most of Soria. And fourth child's the church. I'm not
Yeah.
sure we can say any more than that. This is an
Well,
extraordinary family.
there's actually one observation is that when we think of the time, it was the time when family estates were typically inherited by the firstborn male offspring. So it means that the daughters, unfortunately, they didn't have that many options. They were supposed to be marrying to a worthy family, and the younger sons were to seek their future elsewhere. And gladly, thanks to the colonies that Great Britain had in those days, there were many, many opportunities, both in the service, in the foreign service as well as the military service. And there you could be serving Her Majesty's government, which was, of course, in huge expansion. And that was very important also for the fact that if you all of a sudden you start having 25 to 35-year-old males without a job, like we know, an idle mind is the devil's playground. So having worthy, good jobs for the families and for the younger family members, it was essential for also for the homeland security in those days. And clearly, I mean, this family is aristocratic, so they are very well off compared to many of their peers. So clearly well positioned.
Yeah, and again, I think the reason we spend a little bit of time on this family is it speaks to the opportunity at this stage. Yeah, so Scotland isn't some sleepy backwater. This is the British Empire, 25% of the world. We're coming to its peak in the early 1900s. This is when Augustus kind of comes of age. Yeah, the opportunity is now. This is like Gates or Jobs being born just before the personal computer age. There is great surface area for opportunity. Sadly, it's not all up and to the right. Augustus has a difficult childhood. His father dies when he's 13, and relatively soon he enters military service. So he goes to the Royal Horse Artillery in Sandhurst, which is basically Britain's elite officer training academy. He spends 6 years in the military and then resigns his commission in 1886. And at some point between 1886 and 1889, he basically gets into law. So he kind of always stays in and out of the military because he goes off and serves in the Second Boer War, which is the war basically in South Africa. And later on, he also does World War One service. So he's kind of never leaves the military. He kind of goes in and out as he sees fit. But he starts to build his career in law and in investing. He gets married to Meta Trotter, also from a military family, in 1905. And they have a couple of children, a son, Simon Evan Henry Baillie, in 1910, and a daughter in 1906. So they have a couple of kids and off they go. Right? This is a family setting out on the world.
There's one point that I'd like to make here. What happened also that Queen Victoria sadly passed away, was it 1901, and the Edwardian era had started. That's the time when the marriage took place.
Yep.
It was and that was a unique moment because there were many let's say some of the strict rules of Queen Victoria were actually abolished. For example, men were able to smoke in the dinner table after the main course was done, and Edwardian era was in a way it was like a romantic golden age, and that's when they get married. And this era, of course, continued until the First World War. But this was a very, very specific area of British history and the overall sentiment in the society.
Absolutely. And just in case you got slightly confused, not Marty, but our listeners. So Augustus Baillie marries Meta Trotter. Meta is actually a kind of old English or old Scandinavian name. It's a kind of derivative of Margaret. So effectively, that's why it's not, he didn't marry Facebook or the company that became Facebook. He basically married a version of Margaret. Now, let's now introduce our second protagonist. Yeah. So he's 20 years younger. He's born in 1881. He's born on the other side of Scotland, so in Dumfries, kind of the lowland area of Scotland. And his name is T.J. Carlisle Gifford. Yeah. Now, his parents are not aristocrats, but they are farmers. He comes from effectively a kind of a reasonable livelihood. He's the youngest of 6 children. And he's educated at George Watson's College in Edinburgh, and then goes on to be educated in the University of Edinburgh. George Watson's is very much a strong finishing school type environment. This is an academic excellence, sporting excellence sort of place. And University of Edinburgh is a very, very, very important university in the British landscape. So he has a very good education. And then he basically undertakes his legal training, and he trains with a company called W.S. Cook, and he becomes qualified as a writer to the signet. So I know it sounds very dated English, but we are talking, 1900s. It is dated English. So writer to the signet is a prestigious Scottish legal distinction. And then he himself also gets married. He marries Maud Oriel Rita Pearson, no relation to the educational publishers Pearsons, in 1907. And basically, there's not much known about T.J. Carlisle's family, but what we do know at this stage, and by all accounts, is that even though he's younger than Baillie, he's also a very talented lawyer and comes out of the gate very, very strong with a real ambition to prove himself in the world. Okay, so how do they meet? Now, this bit's a little bit shady. And I don't mean shady in terms of dodgy. I mean shady in terms of unclear. What we do know is in 1907, Gifford, he's just 27 years old, he encounters a Scots individual called Alistair MacGregor, very Scottish name. And this guy is basically working on the plantations in Malaya. So Malaysia as the old name. And he's got cash flow troubles, right? Over basically the plantations that they've set up there. Now, Gifford is the family solicitor to the MacGregor family and listens, observes, tries to understand, well, look, how can we help? Because effectively this looks like an opportunity, but it's not going well. So himself and Baillie get together, and Baillie has a bit of history in the rubber space. He's already a director of the Third Mile Rubber Company for a couple of years, and he kind of sees the kind of opportunity for rubber. And the dates here are quite important because at this stage, the opportunity is the rise of the automobile. This is about to talk about the dawning of the motor age. And so rubber is going from a niche commodity to basically a mass and globally important commodity. So Baillie and Gifford get together initially as a kind of law firm practice, not an investment firm. And they help create the Straits and Mortgage and Trust Company. So Straits Mortgage and Trust Company in 1909. And this is the embryo of what will become Scottish Mortgage Investment Trust. And that's a big name. And it will become a big part of this story later. And when we're talking Straits, we're actually talking about a strait or a narrow stretch of water, and it's the Straits of Malacca, which is 900 kilometers, about 560 miles long, and 65 to 250 kilometers wide. That doesn't sound very narrow itself, but it's a shipping strait. And this is between the Malay Peninsula to the northeast and the Indonesian island of Sumatra to the southwest. And this is one of the most important shipping straits in the world. This is the Suez Canal of its day, right? Or the Panama Canal. Everybody knows this place. So they create this company, and the idea being is that they're going to basically raise capital and invest in the rubber plantations. So we have the kind of where is it? It's in Malaysia. And we have the what is it? It's a kind of a company for investment. So before we go much deeper into this, I think it's a little bit important, Marty, if we do this kind of explanation of what is a trust company.
Yeah. And there's actually an angle that I'd like to bring to our listeners, and that is it's not by accident that this operation started in Great Britain and Scotland, and part of it is really the regulatory and legislative framework in both Great Britain as well as in particular in Scotland, and why this is important. I mean, financing and Baillie Gifford sounds like the traditional typical commercial company, but the government is not a separate entity. The government, it's you could almost compare the government to like the canvas on which the artist paints the admired work of art, and the government matters, legislation matters, because that is really creating the framework where even the private companies operate. So with that angle, let's go through some of the history, because this is a great story.
Yeah. So look, so you have, I think, a few parts here. You have a legal tradition of trusts in Scotland. So most people don't probably appreciate outside the UK, England and Wales have one legal system, Scotland has another legal system. Yeah. And Scotland's legal trust system dates back to medieval times as a fiduciary system. So what Scotland has is a codified and flexible trust framework, whereas England very much has this piecemeal case law framework. Now, this enabled some more flexibility or creativity for Gifford. Okay, so that's the legal aspect. Then I think there's a second aspect. There's no spoilers here. Scottish people pride themselves on being frugal. Okay, so Scottish people like the stereotype themselves. Yeah. But also, this is a time in Scotland where people have made money, arguably made money outside the aristocracy for the first time. So if you were a ship owner in Glasgow, or if you were a tobacco lord, the colonial, sadly, sorry, colonies, they go there, nick other people's stuff, turn it into products and sell it, model has worked. Money is flowing into Scotland. So Scottish investors are careful with their money, but they have money to invest. So I think there's a wealth flow and a Scottish diaspora that just wasn't there before. So that's the second point. I think thirdly, Scotland at this point, again, we tried to paint a picture. This is not some sleepy backwater. This is the British Empire at its peak. And Scotland made a huge contribution to the intellectual enlightenment of this period of time. So you've got names like David Hume in 1711 to 1776, Adam Smith's Invisible Hand, etc., 1723 to 1790, many others. So Scotland's coming from an intellectual tradition at this stage. Legal, diaspora, intellectual strength. And then there are a couple of other investment trusts around on which Gifford could then model. There is the Foreign and Commonwealth Government Trust in 1868 from London, which is often called the First Investment Trust. And then there is the Scottish American Investment Company, 1873, so a little bit before this time. And this is known as Saints, Scottish American Investment Company. So basically, slight tweak on the acronym, but Saints. And that started in 1873. And we'll put a pin on that because that comes back in our story, the Saints Trust. only 130 years later from today. So we'll get to that. I don't want to foreshadow too much. But at this stage, effectively, Scotland is in the right place to create a trust structure. It's got the legal innovation, the global exposure, the intellectual heft, and a cultural ethos. So, in it wasn't that much of a leap for a smart lawyer like Gifford to then basically create a trust structure for the Straits and Mortgage Company that could serve their investment need. And effectively, that's what he does. He creates a close-ended trust. Okay, so the shares can be traded on a stock exchange. The fund size is fixed. The capital is locked in. This is all about long-term investing. There's a bit of foreshadowing to what Baillie Gifford does now. It's all here. The money is raised and the funds can basically be distributed. This is basically what they set up right from the beginning. So the Straits and Mortgage Company set up in 1909. Baillie and Gifford are very much the law firm behind it. Baillie himself invests in this. Gifford gets one share, basically for his troubles, and they raise a sum total of £50,000.
Yeah.
Huge.
Yeah, but I mean, it's you got to admire the fact that even if, of course, the stars were properly aligned for them, but it still needs a level of opportunistic feeling to start moving to an uncharted territory, which they were still kind of doing, even if there were some precedents. But still, I mean, it was a very long-sighted move that they made at this point.
Yeah, and again, this is very much a seed round. Like we use the seed round parlance in the kind of stuff.
Yeah.
This is friends and family. Like the investors are literally Baillie, his friend Shelley Bontain, who was also an investor in the Third Mile Rubber Company that we mentioned earlier, John McLachlan, Wilson Wood, and effectively this is Edinburgh angel investors. This is what this is. Alistair McGregor, who's the original guy who comes in with the problem, isn't a subscriber. He doesn't invest himself, probably doesn't have the money at this stage. The shares are likely to be listed on the Edinburgh Stock Exchange and then later on a dual listing in London. And by 1913, basically, this Straits and Mortgage Company becomes the Scottish Mortgage Trust. We widen from a geographically specific conversation in Malaya, and we might widen it out. And I think it's a good example because Gifford doesn't just create this close-ended trust. He does a little bit of an innovative twist. So he creates a convertible loan stock, which gives the investors the upside of switching into equity if the rubber industry booms. So what he's trying to do, again, classic hedging, is give you a mixture of security and an option for growth. So again, solid legal work, innovative twist, little bit of creativity, but also, let's be clear, we're financing something on the other side of the world.
Here. And I mean, essentially, you are able to become a shareholder in an entity which is not publicly listed. So the whole idea of private investing into private companies is right there.
Absolutely. So they don't actually confine themselves to this rubber plantation in Malaya. They do invest there. There's no question. They also make an investment in 1910 into the Cuban Telegraph Company, the Chilean Northern Railway Company, and Tahoma Land Investment Company. And I think this is important. It isn't just about rubber. It isn't just about that part of the world. They do also start to invest in the infrastructure that the empire needs. Yeah, because the empire is still expanding at this point, and that's where they go. And I think that's a really important part of their story. So they start small, they start tight, but very quickly they start to expand. Okay, now, before we expand too much, I think it's worth just, Marty, going back to, but why rubber? Why was this the commodity to invest in this early 1900s?
Yeah, that's absolutely the case. And what is actually interesting, I'll get to back to this later. But rubber is actually a pretty significant material even today. I mean, if you think of United States, for instance, even today, 75% of the tires are coming from abroad. So if that supply chain would all of a sudden stop, it would be critical also today, quite the same way how it was important 110 years ago. So, but let's go on. Let's go on. I mean, this is a fascinating story.
Okay, we're going to do this segue into rubber. Right. Now, in the notes, rubber mainly came from basically wild trees in the Amazon, in Brazil specifically. Okay. And it literally was farmers wandering off into the jungle, tapping trees, getting the latex, coming back. Right. It's very much a piecemeal, non industrialized, non systematized industry. Okay. Which also means that the supply is unreliable, it's expensive, and it's controlled by a few trading houses type middlemen. Now, this wasn't a problem until the Elon Musk of his day turned up. Okay, so this is Henry Ford. Now, Henry Ford basically starts Ford Motors in the early 1900s. And initially, it takes him 12 and a half hours to produce a single car. Okay. Then he has his kind of road to Damascus kind of, eureka moment when he visits a number of slaughterhouses and sees the production moving to the people rather than the other way around, and then basically develops this mass manufacturing opportunity. Now, there's a lot more to it than that. We'll go into it. But effectively, he takes the 12 and a half hours down to 1.5 hours to produce a car. So it's a total transformation in time. And he ramps up the production very quickly. So in 1909, he's able to produce 10,000 cars. By 1910, he's doing nearly 35,000. And by 1914, he's at 300,000. So this is like numbers the world has not seen before. And these cars are full of rubber, right? This is the tubes, the tires, the belts, the hoses, the gaskets. So suddenly rubber goes from this, hey, we can afford for a farmer to go to the jungle, get it when it's needed. Nobody uses it that much. There's not that much demand for it. Suddenly, the price explodes. It goes up fivefold between 1905 and 1910. And effectively, this is exactly when the Straits of Malacca, Straits and Mortgage Company becomes into being, because the price is going up, because Ford is driving the price up.
Yep.
Now, we just talked about the Amazon. What's Malaysia got to do with this? Okay, so in 1870s, basically British planters took the Amazonian trees, whether they took them honestly or deceptively. There's a couple of stories in this. Deceptively is probably right. And they basically took them to Malaya, planted them, and found that the conditions there were a lot better for the production of rubber in terms of pesticides, climate, soil, etc., than they were in the Amazon. So by 1909, so when the Straits and Mortgage Company is founded, Malaya is basically the number one rubber producer in the world, right? And also, Malaya has infrastructure. The British have done their thing. They've put in the ports, they've put in the plantations, they've put in the manpower, they've organized it. Yeah, the British Empire had all its faults, but it was good at organizing stuff. And therefore, it's not just about growing the product, it's about bringing it to market. So they do this extremely well. Now, this is the part of the Ford empire that Ford hates. And that's because he's managed to vertically integrate everything else. Yeah. So the Model T Ford supply chain in 1908 to 1927, you've got the steel, you've got the glass, you've got the copper, you've got the leather and the fabrics, and you've got the wood. There was wood in cars those days, particularly. You've got the oil. Everything comes from the US. Everything is vertically integrated. And when we say vertically integrated, Ford starts off buying the stuff, But then he starts off actually owning the mills, owning the factories, owning the production where he can. He basically manages to own his own supply chain. And really,
Yeah.
this is something that no one's done before,
And
right?
I mean, it goes all the way of owning the mines. Like the Fortson Coal Company owned a coal mine in West Virginia because the quality of the coal was so critical for the quality of steel. I mean, just part of the smelting process, you needed the first class coal. So Ford had its own coal mine. So I mean, talking about vertical integration, I mean, it's there's clearly a segue to the need for the critical minerals today for the electrical vehicle industry. The same thing, different raw materials, but the same stuff.
Absolutely. And this is why, and we spent a bit of time here, but I think it's a very interesting parallel to Tesla today, and which we're going to talk about, which is effectively Ford has a problem with rubber. And the problem is he's 100% reliant on effectively the British Empire, Malaya. And it means that he can't get it in the US. He can't really get it from the Amazon, right? So 1920s, and I think this is a super fascinating story, he decides to break free of British colonial control and create his own rubber plantation in Brazil. It is called, drumroll, Fordlandia.
Fordlandia.
Fordlandia. Oh, I love it. It's so fantastic. It's like, let's just, call it Henry Ford's land. And basically, he buys a huge plot of land from the Brazilian government in the middle of the jungle, and then basically puts a ton of money in it. In those days, 20 million, which today would equate to 350 odd million into this. And he puts time, energy, effort, builds the whole thing, plants the trees, does everything, sets up a community, puts a workforce down there. There's an amazing book called Fordlandia by Greglin Grandin on this. And sadly, it is a total failure. Not one drop of rubber from Fordlandia gets into Ford tires in any way or form. Lots of mistakes. We won't go into them too much, but basically, he doesn't do botany, kind of just takes the American town in which he was born and kind of maps it onto the Brazilian jungle. He makes the workers work 9 to 5 during the day when the day is at the hottest. There's so many, sadly, where he does lots of other things right in his production. He gets this one completely wrong. And at the end of it, he spent a ton of money and he's still utterly reliant on the British.
Yeah, and there again, I mean, it only serves to me. It serves as an example of how easy it is actually to move actual production from one place to another. There are so many the tacit information related to the industrial process. I mean, here of course it's very much agricultural process, but I mean it takes more than just a board decision to actually move production from one country, one location to another, because there is so much that is in the skills and capabilities of the individuals and things that you cannot control.
Yeah, and again, I think this is a really interesting one, and I'm sure we'll come across this in other episodes. You look at the TSMC, Taiwan Semiconductor Facility in
Great example.
Taiwan, and okay, can we build fabs in Arizona? Yes, we can build them, but can they then produce chips of the same quality and
Well,
the quantity?
that's a great story. That's a great story. They booked $440 million write-off in 2024 because of the miserable failure. And according to the CEO, he called it futile effort. But that's a subject to another story. But I mean, exactly the same thing. That even if you think that you have all the processes and instructions and everything, it ain't working.
Absolutely. Okay. So let's just summarize this little bit of a section because we've taken our listeners on quite a journey. Okay. So at this stage, we've explained that there's basically 50K raised. We've invested it initially in rubber, a commodity, and in a few other opportunities. And we've shown you how Baillie Gifford started. They've started small. They've limited their exposure. They've invested in a commodity. They developed a highly impressive and innovative legal structure in order to do this, but they're still a law firm, right? This is a law firm. This is not an investment vehicle at this time. And we've also explained that they're kind of very much born of their time, right? British Empire, Scotland, diaspora, etc., etc. And also going global by default. This is a point in time where Britain thought just as much about the Hong Kongs and the other India. That was the opportunity space, not go to Blackpool, not go to Leicester. Global was default at this particular point. Okay, now let's catch up back on the timeline. Few things now have to happen. So World War I happens. That's the first thing. And remember that Baillie's a trained military officer. So he's basically back on the front. So he ends up taking command of a reconnaissance regiment, the 2nd Levant Scouts, and he's on war duties. Gifford's on his own, right? Baillie's out. He's, there's no email. He's not on Slack. He has to go to war. And effectively, Gifford is basically on his own managing at the law firm, gets a little bit of help, but not much more than that. And then after World War II, they consolidate the opportunity. They basically, 20 years after they founded the law firm, they create the investment company. They still haven't basically decided to change the name at this point. So we're Baillie Gifford again. So the Baillie Gifford Company is basically born in 1927. It formally separates from the law firm, but it still operates as a partnership structure. They didn't have to do this, but obviously they'd spent 20 years as a partnership at this stage, so it kind of feels natural. And effectively, they then are now investors rather than dual identity law firm and investment opportunity. And they now start to manage other people's money, right? So they start to kind of gather up other trusts into their kind of portfolio, as it were. And they have a good few years post-World War I in terms of just growing assets under management. They get up to about 4 million by 1929. And that's important because it's good to have a few good years before you have a few bad years. And they have a real challenge like everybody else because the Depression, particularly in America, hits in 1929. And they need to basically balance their portfolio between properties and equities. They do a few more investments, but effectively the 1920s, known as the Roaring 20s, there is a sting at the tail. It's a depression at the end, and it gets pretty tough for a few years just at this point.
Indeed, but I mean, still, it's quite a remarkable achievement. If you take World War I and the Great Depression, they were doing better than most. Because, I mean, those were extraordinarily difficult times to keep your company up and running.
Absolutely. And again, we are very much in a Baillie Gifford type era at this point, this 1927 all the way through at this stage. But they start their survival, ironically, survival bias, their survival of the Depression period, those first early years, gets noticed. Now, it might not get noticed globally at this point, but it gets noticed in Edinburgh. And they capture the attention of a very colourful character. You could use the British firm eccentric, but certainly almost a polymath of his day, a very well-known individual called Auckland Campbell Geddes. Okay, now in 1929, Sir Auckland Geddes, to give him his first title, he basically launches the Monks Investment Trusts. Okay, so he sets them up himself. He sets them up out of his office in Austin Friars, which is a tiny little street in the city of London. And basically, these trusts are sometimes known as the ecclesiasticals because effectively he gives them all of those sort of names. There's the Monks Investment Trust, the Friars Investment Trust, and Abbott's Investment Trust. Yeah. So basically, he takes inspiration from Austin Friars, the place, and sets up 3 trusts. Now, Auckland Geddes, he starts as a surgeon. He does many things. He becomes the president of the Board of Trade for Britain. He goes off and runs a Canadian university. He's pretty much amazing in that sense. But his trusts don't do well in the first couple of years. So he looks for a safe pair of hands to handle them over to, and there is Baillie Gifford. So they take on these trusts and then manage them appropriately going forward. So they've kind of, their reputation gives them the opportunity to manage other people's money at this stage. They're not winning the business. Well, they're winning it, but they're winning it through their reputation. So this takes us all the way through to 1939. So next war coming, sadly, at this point. And also the death of one of our protagonists. So Baillie dies aged 77 in 1939, leaving Carlyle 58, but effectively as the sole founder at this point, with a very small staffing group. And again, at this stage, Baillie's kind of receded from day-to-day management. He's coming in for the board meetings. Gifford's in his kind of intellectual prime and very much running the firm. Doesn't have an awful lot of time to grieve because 1939 is this huge time of change again across the world. World War II, sadly, is coming very quickly. Now, if Baillie got wartime duties in World War I, then Gifford gets them in World War II, but he doesn't have to go to the front and, do a reconnaissance regiment. He gets tapped by the Bank of England and the British government to go to America. So why does he do this, Marty? Why does he head off to America at this point?
Well, I mean, of course, the whole war economy took UK to a point that they were running out of money, and in order to liquidate some of the assets that can be liquidated under those times, it was really a wartime financing effort that he was there. And I think one of the key lessons here is that you have to have a good reputation in order to be trusted with this job, and the trust and reliability as a player in the field. That is one of those core values that are behind the success of the entire company.
Absolutely. This is not an easy gig, right? Now, don't get me wrong, his life's not at risk. He's not going into, battle, but he is basically having to do a quite difficult job because he's effectively liquidating UK government and UK companies' assets in America in a way where he's trying to get a good deal for those owners, but he's also trying to not spook the market. America's not in a great place at this stage financially. Depression is still there, and the American administration is a Democrat administration, and Wall Street is very much a Republican owned entity at this stage. There's tension between, surprisingly enough, this is America, Democrats and Republicans having a bit of a difficulty. They also are quite, not surprisingly, a little bit annoyed with the UK at the moment, Great Britain, because we didn't pay our debts from World War One. Right? So at this point, the new quiet Scottish guy coming to Wall Street and Washington and trying to sell a few shares without spooking the market isn't actually getting a huge isn't getting, well done, thank you very much. He's getting not a cold shoulder, but he has to be very diplomatic.
Which he was.
He has to work really hard to basically win the trust of both the American government and Wall Street. He develops a particularly close relationship with JP Morgan. In fact, he basically operates out of the JP Morgan office when he's in New York. And he slowly basically does what he needs to do in a quiet, unassuming way. Now, I think that this particular period of his life is transformational for Gifford as a figure, because this basically elevates him within the UK circles and elevates him within American circles. He is literally at the table with the US government, with the kind of giants of Wall Street, and they are listening to him. And I think this is a really big, from traveling from lowland Dumfries, even via a good education, the youngest of 6 children, this is him arriving on the scene, as it were.
Yeah.
So we've come to the end of a very quite long part 1. Don't worry, part 2, part 3, part 4.5 are slightly shorter. But part 1, I think, sets the scene, right? Which is Baillie Gifford, or certainly Gifford at this point, has arrived. They're managing other people's money. The reputation is set. The DNA is set. Now, what's part two? So part two, you could call them the wilderness years, right? So this is post-war developments. So we're looking at now the period of time between 1940s and really the 1980s. Okay, so Britain has won the war. Britain and allies won the war. Congratulations, but we've got no money. The empire is breaking up as fast as it can. India's gone. It's all basically falling around their ears very, very quickly. And the firm needs to basically rebuild their position. Now, at this point, Scottish Mortgage, which is their the Straits of Mortgage Companies, rebranded successor, is heavily UK skewed. It's 80% domestic exposure, 6% US. There's also some really difficult things standing in their way, like the exchange controls that basically the British government, successive British governments put in place after World War II to stop the flight of the pound, to stop the money going overseas. So basically, after World War II, Britain is almost bankrupt. Gold and dollar reserves are critically low. Sterling, the currency, is under severe pressure. So a number of parliamentary acts are passed. 1947, we introduced the exchange controls. And again, we live in Finland, so well known for paying higher than average taxes. The tax rate on individuals in 1947 in the UK goes up to 83%.
Yeah, there you go. But I mean, of course, we are now talking about Great Britain here, but if you go to continental Europe, or you go even to Finland, we went through the very same things. The exchange control, I mean, the foreign investments, everything. I mean, this is not only British history, this is European history.
Very much so. We're in a very bankrupt, everything's pretty bad situation. So we limit foreign investments. We manage the sterling area system. That basically we stay as a defensive structure inside Baillie Gifford, and really nothing that much changes, right? In the 1950s and the 1970s, things start to gradually look up. But it isn't really until the Margaret Thatcher-led government of 1979 that the exchange controls get scrapped. Yeah. And actually Baillie Gifford can go out in the world again, right? It's a period of kind of 1940s to almost 40 years where they're basically stuck in the UK.
Mm-hmm.
Now, whether that's mentally stuck, because at this stage, Carlisle Gifford's getting on in years, other managers are also very UK minded. So if we started off being born global, this period of Baillie Gifford is definitely UK centric and inward looking. Now, there is a question around, and we'll come back to that later because we have a number of questions really to answer ourselves, is does this period really help them? Right? It certainly doesn't help them in terms of returns or investments, et cetera, and exposure. But does it help them this period of almost stay in your lane, be disciplined, just survive? You can't go outside, but optimize what you're doing inside. There's a question there that we can come back to later. But fundamentally, before we move into part three, we do need to basically pay tribute to T.J. Carlisle Gifford's time at the helm. So by the time that he basically retires in 1965, he's done 60 years in this company. 60. Right? He started young, but he's done his time. He goes on to live another 10 years, dying in 1975, aged 94. So he has a long life. And when he retires in 1965, the assets are 50 million. And they started with 3K. Okay. So it's 60 years, but it goes up and to the right quite a lot.
I was just curious, when we talk about the category leader, we in a way take it for granted that, okay, I mean, this is how companies are run, this is what happens. But what I'd like to claim, at least as as a food for thought is that the fact that they survived all those tricky years is not a sign that everybody else survived. So, I mean, essentially, the social capital that they, as individuals, as a company, were able to collect was a critical element that they are one of those few survivors. The whole 110-year history is thanks to their social capital and their relationships that way made it possible for them to survive this long march in the desert.
Yeah, I think so. And also, I think, Baillie Gifford is, we're focusing on Baillie and Gifford in these early stages, but really it's a story of unbroken partners, each one passing the baton to the next. Yeah, with unlimited liability in the way that this firm is structured all the way over this period of time. It's a tremendous achievement. And
Yeah.
you can put it on the same timelines of the Jensen Huang, NVIDIA 32 years into this company, right? The Bill Gates 25 years at Microsoft, felt longer, but that's only because he started it when he was basically at school. Mark Zuckerberg has done 21 years at Facebook/Meta. Jeff Bezos has done 27 years at Amazon. Morris Chang, we mentioned TSMC earlier, 27 years, at TSMC. The great founders, they obviously in the great companies, they spend time at the helm. Right? Now, there are a few stories of Gifford in his later years coming into the office and really annoying his staff, really poking holes in what they were doing and being a bit of a grumpy old man. But I'd also say Britain in the 90s and 60s wasn't a great place.
Well, here you go.
So, there's partly a little bit of ageism there, and there's partly a little bit of the circumstances in which he found themselves. But I think,
and I mean the other thing is that he didn't give up. I'm sure that there's been more than a few times when just calling it quits must have been one alternative, but he didn't. He
yeah,
just soldiered on, regardless of the storm and hail that is coming your way. Just soldier on and make it a success, which is essentially the sign of a good founder.
absolutely. Yes. You basically get up one more time than you get knocked down, I think it's an anecdote, but it's so true. And then again, I think there's an interesting parallel to today's world. We're recording this in 2025. Ukraine is still at war, and that war has got no real sign of ending anytime soon. And Ukraine at the moment is fighting for its existence, just like UK and Europe was fighting for its existence, 80 years ago. And Ukraine at some point, one hopes that peace will come on terms that they are happy with. But they will also have to make the transition from a wartime economy to then a peacetime economy. Hopefully their tax rates aren't going up to 83%. But it's a existential war followed by a very difficult period of basically rebuilding your economy and rebuilding for peace.
Yeah, and I was in Ukraine last week attending a defense tech conference, and one of the questions that I asked from a few people who were exhibiting there is that what's going to happen for the companies, all these companies that were exhibiting, what's going to happen then once the peace comes? And there was almost a unanimous feeling that 90% of them will disappear. So who are then the 10% who will survive? Well, they are the ones who were able to prove that their product or service works. And they will get purchase order well into the peacetime. So it's the story of building your social capital, showing that you are reliable, show that you are the man of your word. It's if you can walk the walk, that's the key element, and that's going to be probably very, very challenging for Ukraine. But I totally see the parallel that our societies who survived after the Second World War, Ukraine will have to go through the same painful steps. And of course, I mean, companies like Baillie Gifford, once they've seen this happen before, they are the ones who probably can predict the winners in the Ukrainian economy also going forward.
Absolutely. Let's come back to Ukraine later, but let's also turn now to part 3. So another country that has to manage a very difficult transition from basically World War II destruction to basically kind of ironically technologically booming is Japan. Now, Japan is a country that for Baillie Gifford, I think really represents their frontier lab. This is when they start to go out in the world. Yeah, if this 1940s to 1980s is this difficult UK period, then they start to look at Japan as an opportunity. And in the early 1960s, Japan starts opening up to foreign investment. Baillie Gifford starts buying some Japanese corporate bonds because equity wasn't available to them at this point. There's still the Finance Act, the Companies Act, and various other things in the way before they get to the 1970s. But what they start to do in 1981, they open the Baillie Gifford Japan Trust. Yeah, which gives them the opportunity for the first time to invest in Japanese equities. 1985, they do the Shin Nippon Trust, which targets smaller companies. And then effectively, they launch a managed trust structure. Again, so they start to bulk up slightly and get some more pension client months on board. And I do think, and I don't want to foreshadow too much, I think Japan is a bit of a forerunner to their China strategy, right?
Of course it is.
Of course,
I
of
mean,
course.
well, I mean, it's probably good to go back in time. What was the 1960s in Japan? Japan was not known to be the producer of high quality goods.
Absolutely. Made in Japan was not a compliment at
It
that
was
stage.
not a good thing. And then they started out. I mean, they started producing automobiles for the European market, among others, in the 60s. And the thing is that, of course, I mean, Japan suffered massively in the Second World War, but they took it as a national mission. I mean, it was their existential push to become players in the global marketplace. And in a way, I mean, Baillie Gifford was following the opportunity that was obvious for the people when they saw that, okay, this country is moving ahead and it's moving ahead faster than the relative speed of let's say European countries. And I mean, just to say, it's the home electronics, camera systems, automobiles, and many industrial goods. I mean, they were just advancing faster than typical European competitors. And it's the same thing that later on happens with China. I mean, why is China? Let's talk about China later. But I mean, what was China doing during the last 20 years? They were doing the same stuff that Japan was doing in the let's say in the 70s and 80s.
Absolutely. And again, I think Japan is a fascinating place for lots of reasons, but it's where Baillie Gifford starts to work out we're not a commodity investor anymore. We're investing in these category leading companies. These companies that are doing exceptionally well, that they don't just have a first act, they have a second act and a third act and a fourth act. And I think this is where in Japan they start to see these companies for the first time, right? Because really in their early days, it was about buying land or railways or rubber or stuff. And now this becomes about investing in individual companies and seeing those companies progress over a longer time period. So they go into Kiens, they go to SoftBank, they basically do Nintendo, Mercari. They start to grow their Japan presence. Now, it's not all up and to the right. So Japan has a good start in the 90s, but then very much hits its missing years. Yeah.
Mm.
So the 1990s and the 2000s are not a boom time in Japan at all. And I think this is, again, this survival of the fittest evolution for companies. If you've invested in the right company, even in the down years, they can still grow. And in fact, they can often grow better in the down years because effectively their competitors either disappear or they just struggle a lot more.
Yeah, and I mean the economy of Japan has been, of course, suffering a whole lot. And one of the area that we will not be covering that closely, but I mean, if you look at the birth rate, Japan, South Korea, those are the countries that first actually started seeing the declining birth rates when their industries reached a certain level. And of course, Europe is coming to the same direction. Even United States is coming to the same direction. I mean, it's part of this, let's say, this overall life cycle of industrializing nations, that we are seeing the same developments in all of these countries. And now the point is that, are we able to do something better going forward than just very complacently accepting our destiny? And of course, I would like us to do something differently than what we've seen Japan doing. But I mean, for the time being, Europe appears to be in the same direction where Japan has been.
Yeah, and I think there's a really interesting thing here, which is if Japan is a frontier lab for Baillie Gifford, ironically, if they didn't need a lesson in patience after their 40 years of UK kind of inward torture, they get a lesson of patience now, which is
Mm,
if they invest in frothy stocks in the 90s, they can't sell, sorry, in the 1980s, they can't sell them in the 90s or the 2000s anyway,
mm,
because effectively it would make no sense. So because of the market dip. So they then become, if they weren't already before, they get a lesson in long-term investing from Japan. But other things are happening for Baillie Gifford as well. So they start to basically scale their pension business, particularly back in the UK. They attract a number of pension firms, particularly pension funds, particularly local authorities, so local government pensions, Essex County Council, but also private sector like Michelin, Cadbury's, and others. They attract those. And their assets under management just explodes. In the 1970s, Baillie Gifford, as far as I can work out, they've got like 60 staff. Like, this is not a big firm by any stretch of the imagination. But by 1989, they go for, so in 1979, they're at 300 million assets under management. By 1989, just 10 years later, they're at 3.5 billion. Yeah. So
yeah.
they've added a lot of muscle in a relatively short period of time.
Yes, they did.
Which is very, very good. They start expanding into Latin America, they start going global, and they start to, I think, then apply some of those lessons in terms of long-term stock holding and this category leading chasing. And as we enter the late 90s, they turn their attention back to the US.
Yep,
So
that's exactly what it is.
So I think it's a good time to now go into part 4. So this is tech, this is Tesla, and ironically becoming the kind of category leader themselves. So in 1997, Baillie Gifford sets up the Emerging Markets Growth Fund, which is a dedicated equity fund for emerging markets and high growth companies. And in 2003, I mentioned it earlier, we put a pin in it, they basically take on the management of Saints, the Scottish American investment company founded in Edinburgh in 1873. So it only takes them 130 years to basically take on the management of this company. And then in 2004, they make arguably their first tech investment. They invest in Amazon.com. Okay, now remember, Amazon was founded in 1994, goes public quite quick afterwards in 1997. And when they invest, basically as an online bookstore. We're not talking marketplace. We're not talking AWS. We're very much still in the book stage. But I think this is the Japan lesson. They start to see in Amazon, and they certainly see in Jeff Bezos and his management team, this company has a first act booked. Books. Then they have a second act, marketplace. Then I don't think they saw AWS coming, but there's a third, there's a fourth, there's a fifth. This company is going to expand as the market expands. So this was still quite a controversial move. If anyone remembers the 2000s, Amazon.toast, Amazon.bomb were frequent headlines and that were pitched against Jeff Bezos and Amazon. This was not an up until the right investment when they went in. In 2005, they launched the Emerging Markets Leading Companies Fund, and they invest in the other survivor of the 2000s .com bust, the little-known company Google.
The search company in those days.
You might have heard of them. Yeah. So again, a search company. Remember when Google founded, I think there were 17 other search companies or search engine other companies. Google was the 16th or 17th to market. But probably the best technologically, which is why they generally cut through in the end and develop one of the best business models of all time. So Baillie Gifford basically invests in Amazon and they invest in Google. And then that's basically it for about 10 years.
Mm.
The big reason for that is there's not a lot of other companies survive this period. This was a dark period for Silicon Valley, and this is a difficult period for tech investing. And Baillie Gifford, if you look at their strategy over time, if you kind of stand back from the day to day or the dates in the history as we've been going through, they're really looking for companies around 150 to 200 million in revenue. The product risk is behind them. They've got a market. There now is a question around execution risk and the question around what will be the second act, what will be the third act, what will be the fourth act. Do you believe in this management team? Will they be able to pull it off? That's where their sweet spot is. It's in that kind of growth stage investing space. So in 2013, they make their arguably third tech investment. Another well-known company now, but in 2013, definitely not, Tesla.
And that was controversial.
Yes, because
Definitely.
At this point, it's not Elon Musk controversial. It's the fact that it's electric vehicle controversial. It's the Roadster is the only car controversial. It's the you're not making many controversial, and actually outside California, will you sell any controversial? That's the 2013 bet. It's not this is not the global brand that we're talking about today. This is a company inspired by Nikola Tesla and kind of riding a bit of a climate change kind of green tariffs from America type vibe.
Yeah, and I mean, if you see if you consider Tesla as being a car company, which is of course arguably is not necessarily entirely, there are other businesses within Tesla, but the main point being that the automobile manufacturers were pretty much the most established industrial players and essentially forming with their supply chains. They are the core of European industry. I mean, I'm not talking about German industry
100%.
or French or Italian. The entire European industry has been sitting on the legs of the automobile industry, and somebody coming from Austin, Texas, or from United States in general, and trying to challenge those established players. I mean, it's a David against Goliath struggle, to say the very least.
Absolutely. And also, let's be clear, American doesn't have a Henry Ford kind of, then effectively Chrysler, GM, etc. And then nothing, like for 100 years before Tesla.
Yeah, well, I mean, it's true, but on the and of course the sign is that the Japanese and Korean automakers and even European automakers, they established their subsidiaries in United States because the local competition was, let's say, not that difficult to beat.
Absolutely. And again, if there's anybody in the world that took the lesson from Model T Ford, not the go create your own, village in the Amazon and not produce any rubber, but it's Elon Musk and vertical integration. So this is materials comes into basically your factory at one end and cars roll out at the other. And you automate as much of the manufacturing process as you can, and you do everything from scratch. And you do this idiot's index of how much does it cost me to buy this and how much do I sell it to at the other end. And Baillie Gifford get this, right? Now, whether they kind of go slightly mad at this point, because their Tesla investment is off the scale in comparison to any of their other investments in terms of how much strong they buy in, how quickly they buy in. At one point, whether they are today, they are the second largest owner of Tesla stock behind Elon. Now, that's impressive. Yeah. They go very big on Tesla very early. But they also don't just confine themselves to Tesla. They make a number of iconic investments over this next kind of 10-year period that really sees them become this category leader by investing in other category leaders. They invest in Alibaba out of China. And they do this because of they can see from their public stock ownership of Tencent and Baidu that Alibaba itself is popping like a cork. So they go into Alibaba in 2014. They go into Spotify, close to home in Stockholm, Daniel X company. They pre-IPO, they go into private. They go into Shopify from Canada and expand their position there. They go into NVIDIA in 2016. They go into Moderna, producer of the COVID vaccine or one of the leading COVID vaccines
Mhm.
in 2018. And at the same time that they go into Tesla, they go into SpaceX. So
Here,
they
here.
to another Musk, another vertically integrated company, again, early on. Yeah.
Yeah. And of course, I mean, these are all tech companies, but even seeing it from the, let's say, from the traditional industrial point of view, it is absolutely clear that both SpaceX and Tesla both are revolutionary in the way how they streamline the production with their gigapresses, etc. I mean, just the frantic desire to reduce the number of parts and the number of phases in your production line is what makes it also from the industrial point of view is making it very different. And then of course on top of that, the fact that the automobile is very different when it's electrically driven, and the SpaceX, the same production philosophy. And of course there, if we think about the time 20 years ago, 25 years ago, nobody would have believed that there's a private company that is challenging the nations, the national space agencies in building rockets to launch satellites. And that's exactly what the SpaceX has done. I mean, it was essentially a mission impossible, but
Absolutely.
they did it.
Yep, very much so. You know, if you look at the effectively the leadership that's Tesla initially shown on the welding of steel and large parts of steel, and then how SpaceX also basically led in that particular space, and then their use of SpaceX, particularly, you know, funding from NASA, but then delivering not
Mm,
on these kind of cost plus contracts, but effectively a different financial model, but effectively innovating like the heart's concerns. And I think, you know, the stats are crazy. What 97% of satellites that went up last year were from SpaceX,
yeah,
right? And
and the
yeah, 3% is from countries competing with SpaceX.
Yeah, and I mean the whole space business, what we see today, would not be possible unless somebody reduced the cost of launch to the level where it is today. I mean,
Absolutely.
it's definitely a game changer. And the other thing which is interesting is that one of the future protagonists of our program here is that Peter Thiel, the iconic investor, is already behind some of these companies that we are talking about now. More about him later.
Absolutely. So in 2019, after this amazing streak of investing in basically the world's best companies, we have this one of my favorite headlines ever to come out of TechCrunch, which is a tech publication, is a WTF is Baillie Gifford. That's the headline. Because this is an investor that nobody at this point has really heard of. Yeah. So they really come out to the world in about 2019. And at this point, their assets under management is absolutely flying. And again, they basically are still playing ironically in the same space, but they're starting to look at more private companies. Now, they're not basically shifting their position. They're still looking at this 150 to 200 million in terms of revenue, solid growth, second, third, fourth act. But it's just that the companies are staying private, right? Remember Amazon, founded in 94, goes public in 97, right? You know, Google, similar short time period, go public because that's where the capital was. But the world has changed. Private capital is available more. And at this point today in 2025, 83% of US companies with over 100 million in revenue are still private. So Baillie Gifford plays more into the private space, which ironically plays to their strength, because a private company, you don't have to accept that investor, right? You choosing to accept that investor into your company. It's a marriage, and hopefully a long-term type of marriage. So you're looking for this sort of company with a solid reputation of not selling, not short selling, not trying to take you over, not being activist and complain about what you're doing. Now, Baillie Gifford has this profile, which makes it much easier for them as the world starts to turn to privately funded companies for
Mm.
longer. They're in the right place on the ocean with the right shaped board.
Here you go.
Fantastic. So I think the 2020s kind of mark this end of part 4. Yeah. There's a little bit which I think we'll need to dig into in part 5 about China, right? But we've very much taken this. What did we learn in Japan? Invest in category leading companies, find these companies public or private, and back them to the hilt. So let's move now to part 5, which is defense investing.
Yeah. And of course, the whole defense investing, it's been very, very difficult for many investors to get into that due to the obvious risks. Because for many, many years, defense as such was in the same moral corner in the society like alcohol, tobacco, firearms, and adult entertainment. I mean, essentially, you felt that, okay, that is needed, but it is still something that you want to have a more than an arm's length distance from. And of course, the war in Ukraine, or the escalation of the war in Ukraine, has really changed all that. And Baillie Gifford has been very active with a few companies. And of course, the first where they were active with was with Palantir. And Palantir is an Andrew that we will be covering in a few moments. Two of those companies that are named according Tolkien's Lord of the Rings series.
It would be great if all 3 companies were named out of Tolkien.
That's true. But there are more. There are more of those companies that we could cover in some future episode.
Absolutely.
Anyway, Palantir is an interesting company. It was established 2003. It was partly Silicon Valley people, but also PayPal mafia that has roots in South Africa, where actually also our other protagonist is coming from. But also But Peter Thiel was there as well. So he was clearly there, and he established with Elon, they established the PayPal and then sold it with good money. Anyway, Peter Thiel is one of those who's behind Palantir. Alex Karp, the very eccentric frontman, the guy who is giving very, very interesting interviews and keynote speeches. It's very, very nice to listen to his stories because he's not holding back. Stephen Cohen, Nathan Gettings, Joe Lonsdale, all these, and essentially these are the fellowship of Palantir. And I'd like to add another guy. There's another guy who is also excellent, and it's the employee number 13 of Palantir, and that's Sham Sankar, who is the chief technology officer. And why do I want to include him is that he's one of those guys who is very eloquent and giving very nice interviews in explaining what Palantir is all about. And him and Alex are absolutely nice to listen to because they are open in sharing why Palantir is what it is. It's a data company. They take huge pride in being the one who supplies software that works. And that's clearly a statement where they are challenging many of the other players in the field. They have forward deployed engineers, and they are very, very open in hiring individual thinkers, people that are not necessarily the easiest to manage. And they are also encouraging that if you see a mistake somewhere, I mean, your co-workers' area of responsibility, there is something that you can easily fix. You are expected to fix that problem. And if you are the co-worker that is being helped this way, you need to thank for the help you got. And this is not easy to live with, where people are much more comfortable in living all kinds of silos. But this is fundamentally critical in understanding what Palantir is all about and their rapid pace of development.
Yeah, and they very much pioneered this forward deployed engineer concept. Very much literally getting an engineer, parachuting them into the company they were working with, or putting them on a plane, putting them in a war zone, and actually working with the customer, working with those frontline staff or frontline personnel to basically get the data product working that was useful to that company.
Yeah, exactly. Now, Palantir is clearly one of those companies who is, in addition of being active in the civilian domain, is challenging the defense establishment seriously. I mean, they have sued the government a couple of times. For example, in 2016, when the US Army was not willing to let them bid, they successfully sued the government, and also the attitude of trying to um, give an alternative. Sham Sankar has in several. I mean, he has actually an interesting podcast which is called the First Breakfast,
Okay.
which is an antithesis to the Last Supper. That was the 1993 event when essentially the DoD then said to the prime contractors that you need to right size, downsize, and consolidate, or you
Okay,
will
just
die.
explain that because people might not be as familiar with that move as.
Yeah, well, I mean, 1993, there was a dinner in the DoD, in the Department of Defense, and essentially a couple of years after the Cold War ended, and DoD said that okay, we are not going to need a defense industrial base like you had, so you need to downsize and right size and consolidate. And as a result, Lockheed Aircraft merged with Martin Marietta, and we got Lockheed Martin. Or we have Northrop and Grumman going together, making Northrop Grumman. And essentially, Northrop Grumman was actually contemplating a merger with Lockheed, but it was called off at the very last minute. Now, the part of the challenge that Palantir is doing now is that there's this podcast called The First Breakfast that is spreading the ideology, let's say the values and ideas of and Sham Sankar is doing it very very well and very eloquently. So very definitely worth listening. Not going too much into that, but clearly, if we think about the time when Baillie Gifford went to own Palantir, it was very early on, and essentially they sold all the stock.
Yeah, so they went in 2014. Yeah.
Yeah, and then they sold it by 2021.
2021. So that's for Baillie Gifford, long-term investing we hold for
Yeah,
decades, thinking
yeah,
quarters. This is
but
not normal.
yeah, but on the other hand, it may be understandable because
Okay.
if you think it was underperforming, it was controversial, and not the least the collaboration with CIA when the Palantir software was used in intelligence operations. It was very controversial, and you can see the same controversies these days. For example, when the Finnish originally Finnish company Oura
Okay.
published that they are working together with Palantir for the rings for U.S. Army, there were many consumers in the United States who have been protesting now against Aura because it's allied with Palantir that has this questionable reputation in the eyes of some. At the same time, it is worth saying that very recently this summer, Palantir had a purchase order for worth $10 billion covering 10 years 10 years of consolidating US Army software. So there are some people who are definitely valuing what Palantir is doing, and then there are others who are very critical. So in a way, I mean, it's very understandable that Palantir was not necessarily the easiest stock to hold in 2021, but unfortunately, of course, for Baillie Gifford was that there's this huge growth as a part of the AI boom, and as of today, because I checked it today, the market cap is $432 billion as of today.
Wow.
It's the 21st most valuable company in the entire world. So I mean, it's really rubbing salt to the wound. Now in our case, defense revenues are 55%.
Okay.
So it's more than half. There's been a significant growth in their domestic business during the last 12 months or so. So it's very well established. But of course, as far as revenues are concerned, they are in the 3 to 4 billion revenues a year. I mean, it was around 3 last year. It's going to be probably something closer to 4, 2025. But it is very small compared
Very much so.
to where if you think about, for example, Lockheed is in the 60 something billion revenues a year, and that's a very different story. But for market capitalization, it's a massively valuable company. Lockheed, if I remember correctly, is around 110 billion at the moment. So Palantir is 4 times more valuable,
Exactly.
according to the shareholders.
Yeah, and again, there's back shadows of that. You know, Tesla is not modeled as a car company. It's 60 times multiples. Clearly, Palantir is not modeled as a defense prime company. It's some hybrid of AI and market capture on one side.
Yeah,
But obviously,
but
let's
it's
not fall too sorry for Baillie Gifford. You know, they do hold Nvidia, Amazon, Google, and everybody else.
yeah,
But
yeah,
they definitely
and
missed
it's
the Palantir surge. They missed that.
but Palantir is interesting anyway. Anyway, the other company which is interesting is Anduril Industries that was founded 2017,
Okay.
and the head guy is Palmer Luckey, and then there are some other people from Founders Fund that are there. Founders Fund being a key investor, and what they did is that they essentially had Palantir meets SpaceX. So you had the hardware, you had the AI, but then you combine that with hardware, because in order to make a difference in the battlefield, sooner or later you need the hardware. So that's what they are doing differently. And of course, this is another eccentric company. If you've ever seen Palmer Luckey anywhere, he has something like 100 different Hawaii shirts that he's wearing almost everywhere. He has a couple of suits that he's using when he's seeing some senior customers, but another guy that is very eccentric, pretty much like Alex Karp, and of course very good in what he's doing. So
I do like the fact that obviously Palmer Luckey basically has his own little founding story in terms of creating the Oculus VR
Oculus, yeah.
headset,
So
basically in his
serial entrepreneur.
a camper van, selling it to Facebook Mark Zuckerberg, who was famous at the time for his own uniform of kind of, you know, gray t-shirt, you know, et cetera, et cetera. And Palmer Luckey's kind of the opposite, which is he's got his uniform is like kind of, you know, funny haircut, Palmer, and kind of Hawaiian shirts and very outspoken. And I think there's also the opportunity there that, again, the exposure to Palantir, whether they miss the opportunity or not, gives them the access to the Anduril team, because it's 3
Of course.
Palantir alumni, Trey Stevens, Matt Graham, Brian Schimpf, etc., that Palmer plus Joseph Chen very much is this Avengers style, you know.
Yeah.
And
And
tell me more about the Anduril business, right? Because
yeah,
the
well,
Anduril business is, I think there's a throwback a little bit ironically to the SpaceX business more than there is
yeah,
some of the other ones in terms of how they are positioning themselves against these US prime players.
yeah. Well, I mean, first of all, what is important is that they 24 their revenues were
Okay.
$1 billion, which is more than double the year before. So they are in great shape, and their post money the last I think it was Series F funding that they got. They are now 14 billion is the post money valuation. At the same time, it is absolutely important, and this was Palmer Luckey himself who said in an interview that the shareholders are making a bet on a product portfolio. They haven't really, I mean, none of the years have been cash flow positive, so they are just spending money, and the shareholders are making a bet that the product portfolio that is being developed is the right one. And this is very important, because if you think of the Lockheeds and the RTXs and Boeings that are listed companies, they have a huge amount of shareholders that are following their quarterly results. Anduril can still be without that burden. I mean, Palantir is a listed company. They have a market cap, they have a share price to protect and defend every single day. Anduril is still a private company, and they don't have to worry about those things. It's enough that the shareholders believe in the narrative. What has happened, for example, there was let's say it's a bit more than a year, 2024, I think it was in May, when the US Air Force announced the winners of the next stage of collaborative combat aircraft program, which is essentially the loyal wingman concept. And the winners were General Atomics and Anduril Industries. They were
Okay.
the 2 ones that were selected to go forward. And the ones who were dropped at this point was Lockheed Martin, Northrop Grumman, and Boeing. So really showing that
Says it all.
the challenges. I mean, General Atomics has been around for 30 years or so, so they are very established drone manufacturer. But the point is that clearly the Anduril has been able to challenge the defense prime contractors pretty much the same way like SpaceX challenged the national space agencies, including NASA.
But
So,
just explain for those who are familiar. So explain the difference between this kind of cost plus contract, so how generally that both NASA and the Department of Defense worked, and why what SpaceX did and why now what Anduril is doing challenges that.
well, I mean, I guess there are many contracts, cost plus being one of them. But let's say when you are a defense contractor and you are publicly listed company, when you don't have a guarantee how much the customer will pay buy from you the product or the service that you produce, you try to get some guarantees from the government that
Okay.
okay, tell me how much you're going to buy, and then we can invest. If the government is saying that okay, I'm not going to be buying, I'm not going to make any commitments, we will make commitments year by year, which is a typical fashion, then the industry easily says that okay, I mean, we cannot take the risk by investing into this product, into this new industrial capacity. And then the question from the defense contractor is that okay, can you help us with the investments? That is all based on you trying to minimize the risk that you are investing into something that eventually will not sell. And it's all about risk sharing. Who takes the risk of future revenues? In the case of Anduril, which is a private company, the shareholders are taking that risk. They believe that when we develop these products, they rely on the forecast, the vision, or the leadership saying that you're going to be on top of your game in 5 years and the customer will buy. And that's really a massively different business model. And it's a massively different version of risk taking, which is only possible with professional investors. And this is really, I mean, if you look at the Boeings and the Northrops and the others, they are very much doing the future product development with government money. And what it means, among other things, it means a delay in the process. Whereas if you look at what Apple was doing, essentially Steve Jobs was always saying that he's not asking from the customers what they need because they don't know yet what they will need, what they want to buy in 5 years. And essentially, Palmer Luckey and Anduril is doing the Steve Jobs version of business development. It's rather than just asking the customer, trying to predict what the customer will buy. Now, I'm not saying that Anduril is developing their products in isolation from the customer. Of course, they are listening to the customer, but it's still that you are developing the products that the customer will buy in the future, not the products that the customer will buy today.
Yeah,
And that's where there's a clear analogy with the business model of Apple.
I totally agree. And I think there's something that Anduril said many times, which is they look at this 5-year horizon. They're an American company mainly selling to the US Department of Defense. They're looking at the capabilities the US Department of Defense is going to need in 5 years. And then they're making sure that they have that capability ready to buy. And I think, again, we would be amiss in if we're talking about Anduril to not look at, they built on this software model, Lattice, I think is the name of their system that flows across all their hardware products, whether that's sensors in the southern border or drones or
Space
anything.
assets. I
Space.
mean, they have a really solid space program.
So the idea being is everything connects.
Everything connects.
And then what they've also tried to do, and certainly underlined it, I'm not sure how successful they've been, is also make sure that they are the connector into other people's hardware systems. So that then the US Department of Defense isn't left with putting all these APIs together and trying to create a strategic view of the battlefield from Lockheed or Northrop and Anduril and everybody else. Anduril's trying to position itself so that it creates that view.
Yeah, and I mean that's then part of the DoD's long time objective of having open architecture. They always talk about the open architecture, which in in the maximum would mean that you can even integrate the software separately from the hardware. It's another interesting element, and too long story to cover here today, but it's clearly one element where the end user customer is willing to have more flexibility on who they are buying their stuff from, and they hate vendor lock-in. And it's interesting. I mean, Anduril is definitely a company that is investing into hardware at the moment also. But I would still say, and I mean, actually, this is when I had a meeting with a year ago with a bit less than a year ago with Anduril. They said that actually it's the software that is their core product, and the hardware is a slave to the software. It's just a platform to get the software where it needs to be.
Yeah, the hardware,
And
they've given the software their body,
yeah,
effectively.
but on the other hand, I'd like to remind you one thing. I mean, if they are making 1 billion in revenues at the moment, they are in order to challenge. I mean, in order to genuinely challenge the prime contractors, we should not forget that the Lockheeds and RTXs and Northrops and Boeings, they have a massive industrial machinery behind them. So all of a sudden, leapfrog them takes a whole lot more than what we see today. And the other thing is that some critics of Palantir and Anduril and all the other disruptors of defense, they say that sooner or later these disruptors will start to look like the heritage prime contractors, as long as the government is not changing the way how they purchase stuff and how they request the government requirements, the federal acquisition regulations, and all that. They are actually morphing the suppliers to look like the end user customer. And if the customer is not massively streamlining the procurement, all the smaller suppliers eventually will start looking.
Okay, so do all the dogs end up looking like their
Yeah.
master at some point? Is that
Anyway, we have one company to cover, and that's the Tekever from
yes?
Portugal. Another interesting company, also very much in the autonomous unmanned systems in various, or used also on the sea, but unmanned aerial systems, and a company that for many years was actually owned by the founders. It was totally bootstrapped about 20 years
Impressive.
before in 22 they eventually raised the Series A of 20 million, their first institutional investment. And that's quite something. And of course, when they did it this way, the good side of the story is that they were already profitable. They already had the revenues. They were very much committed to the European security. They were vertically integrated, and they were dual use pretty much from day one. So even more than half of the operations are for civilian use, and only less than half for military revenues. So that's an interesting element, because that also gives you resilience when the customer demand for in one segment is changing. You have a chance of replacing some of those revenues from the other segments. So having a balance between the civilian and military use actually makes a lot of sense. And then, of course, what is very important here is that they are already in Ukraine. In the Defense Tech event I was last week, Tekever was one of the main sponsors of the whole event, and they were very active there as well.
And Baillie Gifford came into these guys again. Earlier is not the right term, because this is a 21-year-old, 22-year-old company, bootstrapped for 20 years. But effectively, they came into their Series B. And again, remember, if you're not familiar with these numbers, this is like the seed, Series A, Series B. They're just labels that we give to financing rounds. But effectively, in this case, Baillie Gifford led the 70 million Series B in Tekever in 2024, late 2024, and they invested alongside the NATO Innovation Fund, which is this kind of combined sovereign wealth fund that NATO has with, each different NATO country, not necessarily all of them, but the majority of them putting into a pot, and then NATO investing alongside other investors like Baillie Gifford, which I think was very interesting.
Yeah, and what is also very interesting is that Yes, we know what happened with the with Palantir earlier, but for Baillie Gifford, this was this was clearly one of those cases where they need to reassess their approach to defense companies altogether. So they had to find the justification for the for how the ESG requirements can be morphed into also the defense domain, and why security is critical for sustainability or the societies or the values, etc. So this is an interesting showcase to see that how these justifications were done.
Absolutely. And how would, if you were leading this investment from a Baillie Gifford perspective? Because I think, yeah, again, this is the difference that we've come to in part five, which is investing in a growth stage company in the, I don't know, Moderna, create vaccines, save the world type
Mm,
stuff. And then investing in a company that has a split usage between, dual basically civilian. How do you judge this sort of investment? What framework do you have to use to basically unpack this opportunity? What is responsible investing when you're actually looking at something which has a military capability, which, as you mentioned earlier, was seen as a kind of sin stock, arm's length, keep away from me for quite a long time.
mm. But the and the other thing is that regardless of how you explain it to yourself, you have to explain it to your investors, and you have to potentially explain that to the public opinion, to the press. When something happens, then it may be impossible for you to speak yourself out of the problem, because if the public opinion turns against you, then it's going to affect your other investments, even if this one is very, very small percentage of the whole portfolio. But there is, and it's one of the questions for which we don't have an answer yet, is that how did they do? What is the risk mitigation actions that they took? What is their crisis plan? What they have in place? Because eventually, if you are in defense, deep in the defense, you need to be comfortable with the mission of your customer, and you need to be able to justify to your employees, to your investors, to your other stakeholders why this is a responsible matter. Now, when it comes to us here, of course, for us, we understand that why defense is important for the for the let's say for the sustainability of our nation. It's absolutely important, but this is clearly something that each and everybody needs to assess themselves, and
Yeah,
it's not simple.
yeah, and I think what we do know from their statements, and we haven't looked at their investment memo, which is basically what someone would create to basically take to a group of people, an investment committee, and make a decision, is they certainly made public statements that security enables democracy. So without security, you can't have environmental, sustainable government. That doesn't work. Like Ukraine can't do carbon reductions if it's being blown up every 5 minutes, right? So almost security then comes as before these things. Yeah, they would have obviously done a market analysis on this company. They would have looked at the deep technology of this company and assessed it against other players in the market. They would have done a risk assessment. But ultimately, I think probably the heavy part of this investment memo on this company, but any defense investment, is how is investing in this company responsible? How is this effectively not just a good use of shareholder investors' money and get a return, but ultimately, and let's just be clear, Baillie Gifford would be looking for a 10x return in this or any other sort of
Of
investment.
course.
But how will effectively this not be judged by the media, but very much judged by yourselves? But then you have to be comfortable with that potential long-term media position.
Yes, and I mean the other thing which is also a sign of time, for the past 10, 15 years, it's been clear that when we talk about the military capabilities, those cutting edge military capabilities are more and more based on civilian technologies. So it means that it doesn't have to be a drone. It can be artificial intelligence, or it can be quantum science. All these latest and the greatest technologies, even if they are developed by universities, even if they are developed under open and transparent science, will be used for military purposes. So if you want to be involved with critical technologies, in high technologies, in the latest technologies, you have to have a position for the defense use thereof. So you cannot avoid. I mean, there's not a way to escape the military use of the latest technologies. And if you want to be involved with the latest technologies, you have to have a stance. You have to have your own rationale related to the defense use of all these technologies. And more these technologies are taken under the export control for that very reason. And like it happened just a week ago, it
Okay.
was announced that all unmanned aerial vehicles will be treated by U.S. government as defense articles. They will be treated in export control like defense articles. It shows just the name of the game. So it would be, I could even say that it could be even an irresponsible approach to try to avoid the defense use of the latest and the greatest technologies. It's much better going forward to find your own way of investing and finding your own rationale and justification for it, because you can't avoid it. It is there, regardless of what you think. And we know from the past that Baillie Gifford has been quite skillfully has been following the trends. And this is, as we speak today in 2025, defense and the defense use of latest technologies. It is the name of the game today. So you should not avoid it. You have to have your own rules and justification for it. And therefore, finding the way how you explain it to yourself, finding the way how you explain it to your stakeholders and your employees is critically important.
Absolutely. And before we leave this part 5, this defense fixing section, let's actually go back to another mega trend that we kind of talked about, but we didn't talk about. We talked about Japan, and we then talked about how Japan's strategy then was taken into America, and we also talked a little bit about China, Alibaba, etc., etc. Now, China's economic growth over the last 30 years has been one of the biggest megatrends ever that shaped the planet. Where does Baillie Gifford sit on China?
Yeah, well, I mean, there's this very recent interview that I was listening, and probably you've seen it as well. It was Peter Singlehurst from Baillie Gifford, and when Peter was asked that are they overexposed to China due to the past, and actually the response he was afraid that they are underexposed,
Okay.
which is quite interesting. Um, First of all, it is quite understandable that Baillie Gifford has been in China, because for many years it's been like Japan and America on steroids.
Yeah,
I actually
absolutely.
many years ago I met with a guy, Peter Carides, who had been working in Hong Kong in the first decade of this millennium, and he said that Hong Kong is like Manhattan on steroids. And the thing is that the Chinese economy and its ability to have rapid development of the latest and the greatest technologies and building new companies, it's been extraordinarily good. And according to Peter Singlehurst, clearly he sees that trend continues. At the same time, we know that U.S. government, for example, and I believe that the European governments will follow, they're trying to weed out any trace of Chinese supply chain from the defense articles. So there are some Finnish companies who have made the deliberate decision that when they are serving the US government, they are not selling anything to China. And this is very much appreciated. Now, at the same time, if we think about the imports from China to United States in 2024, it was around 460 billion. So the US economy is not working without Chinese imports. And of course, a lot of that stuff is very low quality. But I mean, things like currently China owns more than 50% of the copper smelting capacity in the world. They are controlling copper, and copper is everywhere. So we are very dependent on China everywhere. At the same time, we should make sure that China is not able to influence our supply chains when it comes to defense products. So this is a very controversial thing. If you see it simply from the investor's point of view, China has still a lot to offer.
Absolutely.
But can you avoid helping your main adversary if you are investing into that economy? I don't have an answer to this question, but this is a very, very interesting theme. What is the dealing with China and our security?
Yeah, and I think it is different. Also, you look at, Baillie Gifford is an investor in ByteDance. Again, actually, and I completely agree with him on this particular point, they don't really talk about ByteDance and TikTok. Sorry, TikTok is ByteDance in the US.
Mm,
Don't really talk about the US product and actually the noise that comes with that. Is it allied? Is it banned? Is it sold? Is it not? Because actually, the vast majority of ByteDance's revenues actually come from within China, right? That's where the money actually comes from. Now, again, I think there is an interesting aspect around what is Baillie Gifford's investment approach to a company like ByteDance, and then what would Baillie Gifford's approach investment company to be the equivalent of Tekova in drones space,
mm,
right? So
yeah,
again, are you just, no disrespect, blinkers on, super focused on the category leading company in front of you and their
mm,
market opportunity and what are they doing in the world and how do they grow? Or are you slightly blinkers up for certain sectors? Yeah, where you basically, kind of like let's take that shield off and let's actually have a look at the kind of geopolitical implications. We
yeah.
don't know. I think it's a fascinating conversation.
And this is very difficult to, but I mean, we know that, for example, exporting the latest and the greatest AI chips from United States to even a company that is owned by Chinese capital is export controlled, and of course that part of legislation is changing. But this is definitely not a simple thing. Also, and this is something that I've asked from many people, is that the it is also plausible that if we go 5 years into the future, there's no guarantee if China continues to be the existential enemy.
Absolutely.
There's also the possibility that then the superpowers come to a conclusion that rather than competing ourselves to death, let's just share the world into segments, and you can govern that side and we will govern this side, and let's work together rather than wasting our time and money in competing a battle that nobody can win. And then all of a sudden the political will and the political, let's say, assessment of the situation will change the priorities. And if we compare what happened just a couple of weeks ago, there's a draft. The Secretary Hegseth came up with a draft of a national defense strategy of the United States, and there China was no longer the number one security challenge. It was homeland security. So already there is a small shift saying that the power battle with China is not the problem number one for United States. It is there on the list, but it is not number one. Homeland security is. Now this was a very premature statement yet, but it was indicated by Secretary Hegseth that was going to be the core message of the updated national defense strategy, for which we haven't yet seen the final document.
Okay. All right. So let's pull part 5 to a close with that particular area. And then let's try and bring this category leaders episode home. So we're 2025. Where do they stand? Well, Baillie Gifford's assets under management. If you remember, we started in 1909. Feels like a long time ago, but it isn't. With 50K, Straits and Mortgage Company, that then becomes the Scottish Mortgage Trust. By 1929, we rise to 4 million. Then during the 1960s, 50s, 60s, we get to 10 million, 20 million by 1970. And then, pop, by 1990, we're at 50 billion. It's up and to the right. Yeah.
Mm.
And then today we're at 286 billion assets under management. Yeah, so it's a bit like any other big tech company, Google and Amazon, they feel big in the beginning, but actually the bigness, the 97%, all comes on the second half of the graph. Baillie Gifford's returns are extremely good across the board when you look at this kind of aspect. They rival the founders funds, the Sequoias, et cetera, et cetera, et cetera. They've had their duds. We probably
Mm,
haven't got time to talk about Northvolt, which they invested in 2015, which basically sadly went bankrupt and took a few of the dreams of the European battery industry in them. They missed Palantir's 1,400% rise on that particular side. But overall, when you look back at this overnight success story, 117 years in the making, I think, when I step back from this, having done all the research that we've done over the last month or so, I think it still comes down to this. They set their DNA very early, a partnership model. Yeah. When they based on a law firm because they were lawyers. The founders, particularly Gifford, spend a lot of time at the helm. He did the years. They had their upswings. They managed 2 world wars. The second one they really benefited from in terms of Gifford's reputation, both with UK government and US government on Wall Street. They didn't die or collapse during the post-war rationing period, 1945 to 1980s. They didn't get acquired. They didn't really change. They didn't grow, but they didn't die. 60 staff, etc. They went back globally with Japan, and they basically started reinvesting in interesting companies, which then set the tone for them for the future. They started finding these category leading technology companies themselves. That then set them up for the 2000s with Amazon, Google, the survivors of the dot-com crash, then that very ballsy investment in Tesla and then Nvidia. Nvidia was not a slam dunk when they invested, no question about that, right? And then this interesting more recent chapter in basically responsible investing in the defense space. So,
yeah.
Marty, what's your summary on this company when you
Well,
kind of stand back from all of what we've talked about?
well. I mean, there's one data point that I'd like to add to that, and that is the fastest growth coincided with the time when the regulations changed under Margaret Thatcher. I mean, it was not the starting point, but it was in the middle. So it clearly had an effect. I think first of all, of course, the partnership model, the incentive model, the fact that the directors and the partners have been rewarded based on real gains has been critical. And then one thing, these guys have had a great nose to see what happens next. So even with the First World War, they were able to return a reasonable profit for the money invested. And ever since they've seen where the trends go, and they've been in the forefront of going into those trends, be that the growth of Japan, be that the growth of China, any of the others, including the growth of defense business opportunities. They've had the nose and they've had the courage to benefit from those opportunities. So they've been able to essentially disrupt themselves when the trends are changing. And I think that's the main thing in the end, that rather than being stuck in the narrative that you had before, you've been gutsy enough to adopt a new narrative that is suitable for the time where you live and the coming 5 to 10 years in the future.
Absolutely. And again, many, many years ago, I read the book by Jim Collins, Good to Great. And when I
As
was
we did
doing
all.
the research on this one, this just feels like one of those companies that Jim Collins basically did this business analysis on. This was about getting the right people on the bus, getting them in the right seats, the partnership structure, effectively doing disciplined thought, thinking really carefully about what is going to happen now and what is going to happen in the future. Looking at SpaceX and not just seeing reusable rockets, but seeing Starlink.
Mm.
Yeah. Doing that disciplined thought, taking disciplined action, being a long-term Berkshire Hathaway type investor, holding for the long term, building a reputation of holding for the long term, which is where founders, or certainly visionary founders, want to have you as a shareholder and an investor in their company. And then ultimately kind of renewing the core over time. And ironically, I think that their surfboard, they're in the right place in the ocean with the right shape board in terms of assets under management, with the right culture. Now, as more companies are staying private for longer, their reputation precedes them. So I very much see them in those particular light.
Good.
Perfect. Okay, so last line is Baillie Gifford is a category-leading company who wins by investing in other category-leading companies. And it really is, for us, I think, as simple as that. So thank you very much for dialing into this first episode of Category Leaders. We're going to try and produce them on a monthly or so basis. Bear with us, because each episode is taking a lot of research from ourselves. Next month, or the next episode, episode 2, we're going to take to the skies to talk through the duopoly of aviation. So this is not Apple versus Google fight. This is Airbus versus Boeing. And Marty, we're about to start the research on this. What's your thoughts on Airbus and Boeing? Because at the moment, if you want a plane, these are the only people in town producing them, both defense and civilian type spaces. So what are you thinking before we do the deep dive?
Well, the one thing to remember is that both these companies have a huge history. I mean, the Airbus as a company hasn't even existed that long, but of course the various assets that were brought together represent the history of European aviation. Both of these companies are of course impressive in their own right, and both of these companies have had to reinvent their own internal ways of working several times over the years, because by just continuing doing things like they were done in the 70s or in the 80s or 90s would not have made them active here. Both of these companies are active in defense as well as in civilian world, and it's there are clear differences between these companies, and it's actually very difficult to pick which one you would like better, because fundamentally both are actually very capable companies, regardless of how the public and the journalists see them at any given moment. The main thing which is important is that the founders are not there anymore. Exactly. So the governance that you have adopted post founders is here the key. How do you maintain a entrepreneurial spirit in a company where the founders are long gone? That's one of the key elements, and these companies have solved that issue very differently.
Absolutely. Okay, so next month is Airbus, but before we leave you for today, a few thank yous. So we read very widely and talked to many people to do Baillie Gifford justice. We are big fans of this company, and we've tried to make this episode very much a kind of, a love letter to Baillie Gifford. This is an extraordinary company. So, but a few particular thank yous. So Leo Kellyan and Sarah Robertson from the Baillie Gifford PR media team went way beyond the call of duty to ensure that we were super informed with the right information on what is a very long story. So big thanks to Leo and Sarah. And also Marty and I were privileged to read Richard Burns's A Century of Investing, Baillie Gifford's First 100 Years, which came out in 2008. Richard was a senior partner at Baillie Gifford. He did 33 years at the helm and only retired last decade. And his dedication in pulling together that book was extremely impressive. And that gave us a huge amount of source material, plus 1,000 podcasts that we listened to on that side. And what we've done with Baillie Gifford, and hopefully we will do on other category leading episodes, is very much add a stone to the cairn of knowledge to these companies, right? And what we've tried to do is tell the history, tell the story, and add a little bit more knowledge for those to come behind us in terms of looking and understanding these great companies with this particular perspective. So thanks very much for listening to this episode. We hope you've enjoyed it. Please leave comments. For us, any feedback is super appreciated. and any other thought zone companies that we can feature, European headquartered companies that are won their category globally. We'd love to hear from you. So big thank you for dialing in.
Thank you so much, everybody.